Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Trading TV. This is your stage to shine.
Hello, hello. Hello, good morning. Hello, hello. Can you guys hear me? Please confirm. Hello, hello everyone, and welcome to a new episode of Chat and Chart. This is the London session open. There was a small mistake in the schedule. It was supposed to be 1 hour earlier, but since it took us a bit of time, or like it was too late for us to just change the time because it was posted. So we decided to keep it as it was posted. But originally it should have been at 10:45 Dubai time instead of 11:45. So next week, just keep in mind that we start at 10:45 Dubai time, and we'll make sure to fix the schedule. For now, we woke up with like some great moves. We saw the gold breaking below 4,400, which was a very important level that we were looking at together in the past live streams. So our analysis, or the scenario of gold breaking downwards, is materializing. So we'll get to that, and we'll see where next is it going. So now, first of all, let's start with the high impact news calendar, and then we'll move to the charts. We have a very short calendar this week. Monday, we have nothing of high impact, which is today. So on Tuesday, we have the two data points from the US, the S&P Global Manufacturing PMI and the Services PMI. So the previous both readings were above 50, which is in the expansion territory. Let's wait and see how the actual comes in. We don't have a forecast number. So if it comes above 50, it's still in the expansion territory. But if it comes in higher than the previous, then it's it's not only in the expansion territory, but it's improving and growing. So this would be positive for the US dollar. Next, we have Wednesday, we have the CPI coming from the UK. So the previous is 3%. The forecast is 3%, so no change. It's still somewhat elevated in comparison with other economies. In the Eurozone, it's 1.9%. In the US, it's 2.7%. So the UK's inflation is the highest of major economies so far. If it comes in higher, then that's positive for the GBP, because it means that they should keep rates higher for longer to fight inflation. If it comes in lower, then that's negative for the GBP, because it means that they can start cutting rates to boost the economy growth. Next, we have the crude oil inventories. The previous was a surplus of 6.156 million barrels. We don't have a forecast number, of course. The actual, if it comes in higher than the previous, then that's negative for the oil prices, showing that demand is soft despite of the war, while gold dumping. We'll get to that. Where were you all last week? What do you mean, Meza? Okay. All right. So if it comes in lower or below zero, like as a shortage, it means that demand is higher than supply, which makes sense, which would make sense, because we are in a global crisis, global oil crisis, because Iran, an oil producing country, is in war with the US. So yeah, we expect to see some supply bottlenecks going forward. So that's for Wednesday. Finally, we only have the initial jobless claims on Thursday coming from the US. The previous was 205,000. The forecast is 211,000 jobless claims. So a slight, let's say, a slight tick down in the jobs market. So more people are expected to claim to be jobless in the US, which is negative for the jobs market. But if the actual comes in lower than this or lower than the previous, then it shows that the labor market is still doing well. So yeah, that's it for the economic calendar. It was a quick calendar. It was a short and light calendar. Let's now move to the charts. Yes, go to the XY chart. All right, I'm sharing my screen. Guys, can you please help? Uma? Guys in the backstage, I'm trying to share my screen. Can you please help? Let me see. Do we have any questions? We don't have any questions, no. Guys in the backstage, I'm trying to share my screen. Can you please help? Yes, there is nothing on Friday, nothing of high impact on Friday, Arif. That's why I said nothing about Friday. Good morning, Yahya. Yeah, much better actually. Thank you for asking. Thank you. All right, so let's start with the DXY. We look at the monthly chart. The monthly chart is showing bullishness. If we close anywhere above 100, that's very bullish for the month. And we have 8 days to go for the month. The weekly, last week closed somewhat bearish. So we might see this level, which is 98.6 or 0.7. And then we see a continuation to the upside. The daily, yeah, we're still trending upwards. This is the 98.7 that I told you about. So we might see a small sweep to this level, and then we continue upwards. Pardon me. And this is for the 8 hours, 8 hours, 8 hours. So yeah, we still might break slightly lower than this, and then we continue upwards, or we can just keep going upwards from here. So yeah, the DXY is very obviously bullish for this week. Let's now move to Euro. It should be the exact opposite. We go to the monthly. We see that, yeah, if it closes anywhere below 115, then it would be very bearish monthly close. The weekly, however, is showing some strength around this level, which is like a trigger for me. That's why I have my alert here, which is around the 1.1370, 75. So I have my alert here. I have my horizontal line. From this level, which is a very important level, we saw a rejection. So we need to pay attention to this, because this might cause us some problems if it doesn't break this level this week. Okay? And when I say problems, I mean problems for the people trying to short the USD, the Euro USD, sorry. Okay, so I have my alert here at 1.1650. That's a very important level. We might even get to 1.1670 before dropping. but that's when the DXY reaches 98.7, not before. Or we just can continue dropping from here, but I think we're going to see like 1.16 first before dropping. So that's it for the euro. Yeah, the euro looks very bearish for the rest of the week, but it has to break this level, which is the 1.1380, 1.1370. That's a level that it has to break before we can confirm the continuation of this downtrend. That is very obvious. Lower highs, lower lows, very beautiful trend line. Okay, or very beautiful downtrend, sorry. We move now to GBP. We start with the monthly. Okay, so the monthly chart shows bearishness, but it's like it's trending in a range, so it's not very obvious. Like it's been trading in this range for the past since June 2025. Wow. Like it hasn't broken above this or below this for the past, I don't know, 8 months maybe. Not 8 months, 10 months. So that's like that's a range here. Once you break below 132, which is 90 pips away, we'll start seeing what's it called? Further drops. Okay, we'll start seeing further drops. Yeah, correct. So yeah, for now, so good. I think this is from last week. Someone asked me about the GBP, and I told them I would sell around this level with my stops here, but obviously this one did not work. So forget about it. I didn't take that trade. Like, fortunately, I didn't take the trade. So yeah, but it was a good sell if like they sold from here with stops here. That would have been a nice one. Yeah. So what's next? Let's move to USD JPY real quick. Start with the weekly. The weekly closed very bullish, which shows us a continuation in the DXY path to the upside. So the daily, we already broke Friday's high, so we're doing well. 4 hours. Okay, now I think we're going to see one higher high than this one, which is 160. But usually, guys, when the USD JPY reaches 160 and above, the Japanese government tends to intervene in the FX markets, meaning that they try to buy the Japanese yen to improve or to increase the value of Japanese yen. So yeah, that's why this level you see like rejections from this level quite a lot. So we found the rejection here, and we found the rejection here, and then it was close here, then got rejected, and now we went above 159 like slightly, and we came close to 160, and we saw this sell off. So 160 is a psychological level, plus it's a governmental level, so to speak. So every time it reaches 160 and above, the Japanese or the markets expect the Japanese government to intervene in the FX markets. So yeah, let's wait and see how it goes. If it breaks 160 and it stabilizes above 160, then that's a different story. But I doubt that they will leave it or let it go above 160, 162. AD is dropping like crazy here. Let me check. Well, now it broke very important level here. So let's see if it goes back to 67, which is like 0.6770. That would be a good buy. Why? Because look, that would be this level here around the trend line on the weekly time frame. Okay. So for now, we broke above. What else do we have? Okay, Meza is asking a good question. What does the Japanese government do with buying the yen? Does it mean they try to limit some volume of yen from forex market? Okay, yes and no, because when they buy big amounts of Japanese yen, that shows on the charts, that shows on order books, that shows on the books of market makers. So it shows that there's high demand on Japanese yen. So when you have this big buying pressure on something, the price of it or the value of it goes up, because it means that there's now a limited supply in comparison with a very strong demand. So that's how they intervene in the FX markets. What they do is they say, okay, we buy yen. When we buy yen, it like we reduce the supply in the markets, so in the economy, so it becomes more scarce or more there would be less yens circulating the economy, which would make the yen value go up. Make sense? All right. So yeah, that's it for the AUD. I think now it's time for first. Let's go to the what's it called? The oil. Okay, so oil also closed very bullish. So above this level, it's very bullish, and we might be now heading to 120. So we'll have to wait and see. The daily, it's also very bullish. The 4 hours is also very bullish. We have this trend line here. So whenever it reaches like 95, you can buy with your stops at 91 and target 109 as just like a very simple trade would be this with stops here, the targets here. So that's a 1 to 3. Very easy 1 to 3 trade. I won't take it because I'm saving my buying power or like trading power for gold. Okay. So speaking of the devil, let's move to gold now. Finally. Okay. So on the weekly, it closed very bearish. It closed below the 20-day moving average. This morning, during the Asian session, we saw a break below this low, which was 4,400, and we reached 4,100 or a little bit less, which was the 200-day moving average, and we started to see a rejection from this level. So that could be a level to reject gold to the upside, and like it could look something like this. Okay, it might be this, because the 200-day moving average is a very important level, or it might do something like this, and then we go up. So what I expect gold to do is, me knowing gold, it will reject like properly, like to the upside, like $300 to the upside. People will say, yeah, this is it. let me buy here with stops here. So this will be a very obvious stop. So the market will go down to sweep it, maybe to this level or to this level, which is 3,800. It will sweep it and then close above and then continue to go upwards. So I think the most probable scenario to happen is the second one. Let's color this. 1 second. Let's have it in a different color so that we can tell the difference between the two scenarios. So we have scenario one, gold to go up from here, or it might go up to 4,400, 4,500, close to where it closed last week. And then we see a sweep to the downward or to the downside, and then we start moving upwards. Makes sense? Okay, so that's on the daily time frame. Let's move to 4 hours. Yeah, 4 hours still like. Yeah, by the way, I took this trade on Friday. This was a good trade. I had a buy from here. I closed it late on Thursday because it was like I trailed my stop actually. Let me show you. I was trailing my stop, so I trailed my stop to here, which is 620. So I got like stopped out at 620, but I bought at 525. I bought this during the live stream on Trading TV during the New York session. So yeah, I bought somewhere around here, and I like it got closed like at a stop loss here. So I made around like $100, which is 1,000 pips on the buy trade. And then when I saw that this is happening, I sold with my stops above here. This was on Friday. My stops were above 700. I sold at 650, and I targeted 450. But look what happened next. This was a 1-4, which was very decent. But look, it could have been like 1-10 if I left it, but no, I didn't. So I closed it out at 450. So yeah, let's delete this. We don't want this. So I think this level, do you see this level, might like stop gold from going up. So I expect to see something like this. Yeah, I'm expecting to see like a sell setup around this area, and we move to this level. So let me check the Fibonacci's if they add up. Yes, they do. They do add up, and we might even go to this level, which is 570. Yeah. So around this level, we might see a what's it called? A sell setup. Okay. Let's wait and see. 4 hours. Well, let me check the 4 hours. What's happening here? Yeah, if we do this. No, I doubt it would reach this level. No, I think it will stay below this, retest it, maybe like slightly go above and then close below and continue to go downwards. Yeah, I doubt it will do this or like go up to 4,800 unless it's reversing to the upside. So yeah, to make it short, guys, basically what's happening is either gold goes up from here, from the 200-day moving average, which was at 4,100, all the way to 6,100, so like 20,000 pips to the upside, or it would do this, something like this, which I think is more likely to happen. Um, Go to 4,500, then like trick the markets that it's reversing to the upside, then go back down and sweep all of these stop losses that will be placed below here, and then we continue to go upwards to new highs. So yeah, do you guys have any questions? Let me check. What level is the that yellow line? It's 3,600, Suham. Okay, so a very good question we had is why is gold dumping? It's basically because of this. First of all, the strength of the US dollar, plus um, the war in Iran is causing more uncertainty. So people are scared of everything. So they're keeping cash and they're more focused on energy markets now. So plus, of course, like if you want to look at it this way, gold has been going up like crazy. Like it has been pricing in the like World War III before anything happened. So you guys remember in January it went up $600 in a couple of days. Like it went from 5,000 to 5,600 in a couple of days. Like it was like two trading days. Monday and Tuesday we saw 5,600 on gold, and it was going up like crazy since the beginning of the year, which is like I don't know, it went up 20% in a month, which is crazy because gold does not gain 20% in years. So it did it in a month. So something felt odd. That's why I started to think of shorts on gold, and we had this. We drew this together, which is the supply zone, and it's very obvious. This was a breadcrumb left by institutions. So we saw this dropping, and then we saw this like red, and then we saw this green candle, which showed consolidation by, uh, let me zoom in, which showed consolidation, which is institutions building short positions. So, and then we saw this huge drop. But why does it show as consolidation? Because they have very high volumes, so they don't enter the markets very quick, like at once. They do it gradually. So that's why they sell and then they wait a little bit, then it goes back up. They sell again, it goes down. Then they wait again for it to go back up. Then they sell. That's why you see a small range, which is not. This is not a small range. It's like it's a 200 range or a $150 range. So once we saw this drop, then this is the level the institution sold from. So they're not going to lose, obviously. They have way too much liquidity to lose. So once it reached here, we saw this engulfing candle with this retracement. So this was a no-brainer, and we went down to break this low. So yeah, gold has been doing pretty much everything we're saying in the live stream. So if you're missing the live streams, I don't know what to tell you. Okay, let me check. Let me check questions. Good morning. Eid Mubarak. Same to you. I want to give away account from Twitter giveaway. How can I claim it? Yes, I texted the team and they told me they will contact you. But thank you for reminding me. I'll just let them know after the live stream. Okay, so all central banks could their interest rates. I remember, bro. Bitcoin, yes, we'll see Bitcoin before we go. Bitcoin analysis, we will. Can USD yen, we did USD yen. Do you think that will reach the 605 level? It might. Nothing is impossible. But 3800 is a good enough level for me to buy. Take your orders. That's how we see consolidation. Not all of consolidations, Mesa, but yeah, when you see a very sharp drop after a consolidation, then yes, this is most likely institutions. But some consolidations happen because of lack of liquidity. All right, so Unisoccer is asking now we can buy. You can buy if you're like targeting 6,000. Yes, obviously you can buy. Why not? Um, but your stop loss should be like $1,000 away. Pearson Hardman, I think you should reconsider your stops. If you buy at 4,000, that's a good buy, but your stop at 3,500 might get triggered before just like continuing to the upside. So we're still in the falling knife environment. So I wouldn't buy unless I'm going to hold it for a very long time with a very wide stop loss. Okay. Yeah, so let's take a look at Bitcoin and then we can leave and call it a session. So yeah, the weekly, yeah, this was a bullish close, not last week, the week before. Last week was a correction, and now as long as we're above 65,000, we're still going up. Let me check the daily. Yeah, the daily is showing higher highs, higher lows. So as long as we're above 65, as I told you, above the previous low, we're okay. So I expect Bitcoin to continue going up from here, at least to this level, which is 80,000, before seeing any or like changing directions at least. But for now, I think it could go to 80,000 easy. Yep. Okay. Hours. Yeah, that's a great trend, to be honest. Like it. You can buy here, stops here, TP is here, all good. I'm sorry. Okay, so let me check. If you remember, one day I asked for lead down last on gold, and you did that. Now exactly that's happening in gold market. Love your analysis. Thank you very much. Thank you. I hope you're also making money out of my analysis and out of the brainstorming that we do together on the live streams. Just like to give you guys your justice, your questions also help me with my analysis. So thank you for also helping me come up with such good analysis. So the credit goes to you guys. All right, so I think that's it for today. I enjoyed this analysis session, to be honest. I think we're up to see a very productive week in terms of movements and volatility. But speaking of volatility, you need to stay protected at all times and have your stops, protective stops, in place. Never enter the market without stop loss. I'm seeing it happen a lot recently, so please don't do that. Even though it moves like crazy, the solution is not trading without a stop loss. You place a proper stop loss and you enter when the market gives you your edge. Never rush things and never trade without a stop loss. So yeah, that's it for today. Thank you very much for tuning in. 1 second. Thank you, Mesa. We love you too. So yeah, thank you very much for tuning in, and I'll see you on the next one. If you have any questions, please feel free to reach out. I'm more than happy to answer your questions. Take care of yourselves, and good luck trading. Bye bye.